Welcome to this week's Market Talk. I'm Amber Lancaster, joined by Paul Mampilly. Ian Dyer is on vacation. Each week, we look forward to sharing our viewpoints with you, our readers, and giving insight into what's on our radar. Today's outlook is for the week of April 29th, 2019. I'll begin by sharing with you what I'm watching, and then we'll hear from Paul. Today, I'll cover three topics. The first will be my take on recent U.S. economic data and earnings releases. The second will be my story of the week. And the third will be the latest performance numbers on the Disruptification Index. This past Friday's first quarter GDP surprised us all and rocketed higher to 3.2%, surpassing economists' expectations of 2.3%. This higher than expected number was mainly driven by advances in inventories and trade. As seen in this column chart, Q1's GDP number received a significant boost from inventories and net exports. When added together, Q1's net exports and private inventories totaled 1.68. This is a 1-2 punch in the largest combined boost from inventories and trade not seen since 2013 when it clocked in at 1.73. Now, looking forward to this week's economic releases, there are a number in store for us to look forward to. So we'll have to buckle our seatbelts. So here are the most significant releases. As you can see in this graphic, April's consumer confidence will be released on Tuesday at 10 a.m. On Wednesday, the final print for April market's U.S. Manufacturing Purchasing Managers Index, or PMI, will be released at 9:45 a.m. Also on Wednesday will be April's ISM manufacturing number that will be released at 10 a.m. And March's month-over-month construction spending number will be released at 10 a.m. as well. The U.S. Federal Reserve's rate decision will be announced at 2 p.m. On Thursday, the final print of March's durable goods orders will be released at 10 a.m. Factory orders for March will be released at 10 a.m. And on Friday, wholesale inventories month-over-month preliminary readings for March will post at 8:30 a.m. And the U.S. jobs report for April will post at 8:30 a.m. Now, companies' earnings continue to dominate the U.S. markets. Now, let's check out this list of some of the top U.S. securities reporting earnings this week per Bloomberg. There will be a total of 259 releases in this group of top securities alone. These companies include Google, Apple, Prudential, Allstate, Pfizer, CVS, Humana, Cigna, and Charter Communications. And on a side note, we received a great question from David, a loyal Total Wealth Fellowship member. Hi, David. He's wondering if I can share a similar graphic in print form to our paid subscribers featuring our service's recommended company earnings list. And the answer, David, is yes. So please keep an eye on your email inbox for something very soon. My story of the week focuses on a chart-topping milestone. Renewable Energy Magazine is reporting that electric car registrations have surpassed 100,000 units in Europe for the first time ever. The periodical states that, quote, the electrification shift in the European car market continues at pace, despite the 7th consecutive month of decline in overall demand for cars in March 2019, end quote. JADO, the source for this compelling data release and global supplier of automotive business intelligence, headquartered right in London, produced this telling chart. Please take a look. The green arrow points out that electric vehicles, or EV registrations, topped 119,000. This chart shows a steady increase in EV registrations since 2010. The leading EV car maker in the chart is Tesla, and the top 3 European countries embracing EVs are Norway, Sweden, and the Netherlands. And if you haven't driven in or test driven an electric vehicle, I suggest it may be worth a try. As a long time car enthusiast, I visited a local Tesla dealer with friends late last year to see their cars up close and personal. And simply put, I was more than impressed. From the summons feature, where the car autonomously drives up to meet you, and then engaging the ludicrous mode launch on the Model S P100D, where the car accelerates from 0 to 60 in 2 seconds, was definitely a wow moment that I will not soon forget. So Google Tesla's ludicrous mode launch and then select videos to see exactly what I'm talking about. So finally, let's move on to our disruptification index. This chart shows it continues to outpace major indices year to date. As of Thursday, April 26th, the close of the index is up 22.8% versus 13.8% on the Dow and 17% on the S&P 500. So that's it from me. Paul, what are you watching?
Thanks, Amber. Since we're giving Tesla some love, as most of you, anyone who's following the stock would know, well, the stock actually has been going down a lot because people keep worrying that they've hit the peak of their demand. And it's a kind of joke when you think about what you just reported on, Amber, that the notion that a car that was introduced just essentially last year and has already sold several 100,000 cars is at peak demand. However, the stock market can believe all kinds of things for short periods of time. However, from our perspective and from the disruptification view of the world, the data supports us. In other words, smaller countries now are majority electric vehicle countries in terms of their sales. And we've now gotten to 100,000 cars, and 1 million will be just a year or a couple of years away. And a large number of them will be Teslas for sure. And just to follow on, Tesla actually had its investor day last week. So I was not there for it. However, I have seen YouTube reports from it, and the Tesla car was able to completely be 100% autonomous with no one taking control at any point in time. The person reviewing it said, well, it did look a little wobbly at a couple of points. However, at no point did the person that was in the wheel take over. In other words, the computer, the car, whatever you want to talk about it, was able to figure out what the problem was, solve it, and continue to go. So Elon Musk's notion that he would have hundreds of thousands, maybe 1 million robo-taxis on the road in about 5 to 6 years, today seems ridiculous to many people. However, the idea that you would even sell 100,000 electric vehicles seemed ridiculous when he started Tesla. So I would say, don't sell Tesla short, don't sell Elon Musk short. And we believe in the electric car revolution, and we believe in the autonomous revolution, where for sure we are moving in that direction. And there will be some starter steps, however, for sure we are going to get there, and it will happen way sooner than what anybody is currently expecting. So with that, let me just also track back to some of the other things that are going on in the macro world from where Amber left off, which is that the GDP report really does sort of make a mockery out of all the folks that were telling you late last year that a disaster was about to ensue, some enormous crisis was coming, sell your stocks, hide underneath your desk, go buy a cave, prepare for the doom shelters. 3.2%. I mean, come on. I mean, it wasn't even close. I mean, this is an utter disaster for everybody that was claiming that, there was going to be some horrible thing that was going to happen. Because if there was, you would for sure at least have seen like a 0.5 number. 3.2%, that makes a joke out of all of this. And when you actually look inside of it, it also, once again, does support what President Trump was telling the Federal Reserve. There is no inflation, none. In fact, the inflation number within it is actually really, really weak. Mm-hmm. And it supports actually a Federal Reserve rate cut if it's based on inflation. So the Federal Reserve could cut rates. And as you know, we were strong through that period. We told you to hold your stocks. We told you it was a panic. We told you should stay in. And if you had money, you should buy in. And we told you that big fear, remember, about the inverted yield curve. Well, you don't hear much about that too much anymore. And we think that what you're seeing with inflation tells you that that deflationary boom scenario that I told you about, this is unfolding. And I have one more piece of evidence to show you on that front, which is that now Amber didn't have this on her numbers. However, on Thursday, the productivity numbers are going to be released. And private estimates are that we're going to see the highest productivity numbers since 2010. So that really supports my deflationary boom argument scenario. In other words, we're getting more out of less. In other words, as companies and organizations are making these investments, which really are our megatrends, Internet of Things, blockchain, artificial intelligence, robotics, they are extracting more out of it. And so for me, the current GDP report makes perfect sense. In other words, we are going back to becoming a country of people that make things. And we do it in a technological way. And so we are now making things which now other people buy. So of course our inventories would rise. So for me, very, very bullish signs. And the stock market is also reflecting that. The NASDAQ is at new highs. The Dow Jones is about to break through and make a new high. The S&P 500 is in the same territory. And I believe these are being supported once again by the kinds of stocks that we're in across our services. They're Internet of Things stocks, artificial intelligence stocks, stocks that really are supported by what is now the dominant generation really in our country, in our economy. That's the millennial generation. It's their preferences. It's what's driving, that's what's driving really our economy today. And we saw some numbers last week that we were discussing in our team meeting where the vacancy rate for houses in this country has hit a 15-year low. Now, I was telling our team, but you would never know that from reading the Wall Street Journal. You would never know that from reading the New York Times. You would never know that actually from reading any economic publication, who are really mired in sort of 2008 crisis thinking, looking for the next shoe to drop. Meanwhile, the housing market really is like in great shape, 1.4% vacancy rate. So, and that's really reflective of the fact that we have all these young people that are now really in their prime of earning, and they're looking for places to live, whether to rent or to own, and that's what it reflects. So, you know, we've been reporting on IPOs, and there's been a lot of reporting on Uber, which is supposed to maybe come public this week. And it's looking like they'll come public as a $85 or $90 billion company. And underlying Uber's valuation really is the same thing that really is making Tesla a valuable company. It's really the promise of autonomous vehicles. At some point in time, for sure, Uber will shift into providing robo-taxis from right now human-driven taxis. And so to all the folks that are very negative on Tesla, if you just stop and think about this, Uber is coming public at a $85 or $90 billion valuation in terms of the stock market. And Tesla right now is valued at under 50 billion. So 90 billion, 50 billion. Are you seeing it? 90 billion, 50 billion. You see, they're at least in the same business. So if Uber is worth 90 billion, and Tesla is a car maker, they're going to do robo-taxis. They've also got their battery business. They've got their solar business. Maybe it's a little cheap relative to the future. I'm just saying. I know there's a lot of people that hate Tesla out there, and I'm just saying there's another way to look at it. And for my Profits Unlimited subscribers, I will have an update on Tesla, so make sure you tune in to tomorrow's update. Moving on to other popular companies, Facebook, which is actually owned in one of our services, full disclosure, had unbelievable results. And it's driven by Instagram, which it seems like everybody on earth uses. And really, it's what's driving their results. Apple, as Amber noted, is set to report this week. And I believe it'll continue to show that they have weakness really across all of their platforms. Yes, the stock is back up to over 200. However, I'm guessing it's Warren Buffett or somebody like him that's coming in to buy and in the process bidding it up. It's definitely not driven by the strength in their business. Amazon actually announced last week that they are going to shift their Prime membership to where you will get delivery within 1 day. And, I can just hear the sound of other retailers just being squished. I mean, the retailers like Walmart and Target have just barely begun to respond to Amazon's huge lead of being able to deliver in 2 days virtually anything. And now they've done it by, hey, you can go pick it up in their parking lot or something like that. They're trying to get some kind of delivery. However, I've done some of that, and I can tell you that I've done some of the Target pick it up in your parking lot stuff, and it's okay. I do it with my supermarket. However, whatever I can order by Amazon, I just go back to defaulting to ordering and having it delivered because it's so much more convenient and it is not more expensive. You're going to start to see a number of retailers that have really no purpose anymore for really being around in this new world. Really, their valuations are going to get crunched pretty hard. I also saw a super interesting article in the Wall Street Journal this weekend, and it was talking about Roche, which, if you guys don't know, is really one of the world's big biopharmaceutical companies, leader in cancer, leader in so many categories of medication, and they're falling behind. Disruptification has finally come to the pharmaceutical industry. And that is music to my ears. You know why? Because I've been telling you, if you've been following me for these last 3 years, to buy into biotechnology. In fact, last week, my Bull Profits video was on telling you to buy this incredible ETF that really gives you exposure to what this article says is really benefiting, which is that it is the smaller and medium-sized biotechnology companies that are really taking share. And they are dominating categories that in another time that Merck, Pfizer, Roche, Novartis, they could really dominate it. However, today it's technology, it's intellectual property that really matters, and also your ability to go do things quickly. And this is why next month we are going to put in an unbelievable biotech company that I believe has the potential to be the next Pfizer or the next Merck or the next Roche. So all of you, look out for that. That's going to be in next month's Profits Unlimited. Also want to note that there was a deal this weekend between two companies that most people would never think about. There's a company called Ingersoll Rand and Gardner Denver. Now, these are kind of boring, dull companies. They make pumps and stuff that really nobody really cares that much about. However, the underlying premise really behind this is something that is really, really important. And this is what it is, which is that this new world that we keep telling you about, the world of the Internet of Things, of artificial intelligence, robotics, it requires you to invest or be left behind. You got to invest now, or else 3 years out, you are Target, you are Sears, you are going to go bankrupt. So what's happening is that smaller companies are finding they can't justify the expenditure. They're going to run themselves to zero. So they're merging with stronger companies so that they can invest in their businesses to catch up or at least to compete. And we're going to see more of that across the industries, more mergers in industrials and in pharmaceuticals. So that's good for us because we own the strong and they are going to benefit. And the weak, as we've been telling you, are just going to die by going to zero. Last thing I want to focus on is cryptos. You know that after calling the Bitcoin bubble in 2017, also telling you when Bitcoin bottomed late last year, I'm positive on cryptos. And so I've been tracking it and giving you updates week after week. And this week there was a scare story. Oh, the New York State Attorney General filed a suit against a exchange called Bitfinex, saying they may have swindled as much as $850 million with respect to a cryptocurrency that actually mirrors the dollar. Now, I would tell you that in the grand scheme of things, this particular cryptocurrency, which is called Tether, really has very little meaning for what the crypto universe really, I believe, is going to develop into. And that's caused a lot of cryptos to come back in. The prices have moved back down. However, I would tell you from our perspective, cryptos are for sure one of the major disruptification factors in the world of finance and money. And it's something that is going to start taking market share and cause more problems for banks, insurance companies, in other words, the old world of finance. So that's what I have for this week. Oh, I don't want to forget, if you like what you're seeing and hearing, make sure to like this video, share it, comment, and subscribe. And also look out for, my publisher is doing a promotion this week for an unbelievable industrial stock that I think could also be one of these kinds of stocks that really could be in the news fairly soon. So look out for an email telling you how to subscribe to True Momentum, which has this incredible industrial stock. So with that, back to you, Amber.
Thank you, Paul. Thank you, everyone, for tuning in, listening in, watching us this week. We appreciate you so much, and we wish you a wonderful, excellent week ahead. Take care. Until then.